Welcome everybody. This is the Thursday evening Viper Trading webinar. If you're here to learn about trading futures markets using the Viper tools, you're absolutely in the right place. Tonight's topic is trade two contracts, one scalp, one runner. But I think we're going to mix it up a little bit and try to mix in some other content that I think people are going to like a lot. So hang tight. Let's get our disclaimer out of the way and get over to the charts. All communications from Viper Trading Systems are for educational purposes only. Futures trading does involve risk, and there is a risk of loss. Nothing contained in this webinar or other webinars, including the live trading room, are to be construed as investment or trading advice. And of course, everybody here knows that you do trade at your own sole discretion. If you're just coming in, don't worry. We are just starting. This will be recorded from start to finish. And after it renders tonight, we will post it both in the members area as well as on the webinar link at the website page itself. You can see that right here on this little drop-down toolbar. If you're new or visiting us on the New Year open house we have this week, welcome to you. You're welcome to check out this webinar page here. I think Gary's pretty good at keeping this up to date with the most recent recordings. I think this was his on Monday. So what will happen tomorrow morning is we'll take the one from tonight and put it, all the new ones go right here. So this is, going backwards in time. And I think there's like 14 of them up here, open to everybody, to the public. And if you have to leave early, don't worry about it. Like I said, this is recorded, and we're good to go. Now, before we start, what I want to do is I want to ask a series of just a couple of very quick questions. And I'm going to, while we talk about that, I'm going to get over to an ES chart to just sort of look at a chart. And I want to cover, I am going to talk about the two-lot thing. That's kind of our standard go-to trade setup. And you're going to see how that works tonight. But before I start showing trades and going through the setups and everything, I want to take a quick pulse of the team here. How many of you are profitable trading? How many of you are not profitable? And if you're not, you could just type in a yes or no. So it's a profitable yes or no. So if you're profitable, obviously it would be yes. If you're not profitable, it would be no. And then perhaps more importantly, the bigger question for those of you who say no is, why do you think that is? Now, I'm not talking about profitable like today. Okay, I'm talking about more like, looking out into the longer term, like several days or a week or a couple of weeks or over a month, over longer spans of time. Of course, there's going to be a bad day mixed in here and there, or you're going to have some drawdown where, you're just not in sync with the market. That's normal. But I mean, overall, and I really want to get very explicit and clear and just, why aren't you profitable? What is the hardest thing to learn and to get? If you could just take a minute and type that in, I think it's very important that I'd like to address that tonight, perhaps as more important than the two-lot issue. All right, we're getting some good feedback in here. Let me tell you what everybody's saying here. So I really want to look at making the topic tonight, how to become profitable. What are we going to do to make everybody stop losing money? And I'm going to jot these topics down. Okay, stand by. They're coming in quite nicely. Let me get the question log over here and start writing them down. All right, Mindy says, it seems like I get my fill at the spot where everyone is already taking their scalp. Okay, that probably affects a lot of people. And I think we can do something to fix that tonight. All right, David H. is saying here, let me try to get all these topics written down, and then I'll try to take them one by one. Got a whole hour here. We should be able to get through everything. So don't, just whatever if you're not profitable, if you're struggling, if you're having a hard time getting in trades and you can't figure out what's going on, just type it in, and we're going to address it tonight as much as I can. This is a two-part series, by the way, tonight and Friday morning. So if I don't get to anything tonight, don't worry, I'll get it Saturday morning. When I got David H., when I'm not profitable, then I find I have gotten out too early and left too much on the table. So getting out too early. Okay. What else? What else? Go ahead. Type in. Don't be shy. Sandra says I have trouble taking small losses. Could you elaborate a little more on that, Sandra? Is that implying that you are taking large losses and not getting out quick enough? Is that what that means? Lewis says I am profitable, and I've been profitable since I've started to learn how to use the Viper tools. Okay, good. Hey, Gene. Gene is saying controlling emotions. Oh, we got to talk about that. Yeah, that's a good one. Control emotions. Emotional response to losses. I overtrade and revenge trade from John. Okay. Emotions, overtrading, and losses. Another one from Mindy here. Chasing trades. Patience and waiting for the trade to come for you from Davin. That's a tough one. We'll tackle it. Keep Chris F. Profitable, get in late sometimes. Okay, yeah, we have the getting in late thing. That's a problem. Misha, making Viper calls and entries more vocal. Okay, we'll take that note of that. Over leveraging from John B. Okay. Over leveraging. Another one from Sandra here. I try to stay in trades when they go against me. I think that's speaking to the small loss thing we were talking about there. Yeah. Holding on too long. Okay. Let's see what else we got here. Might get hungry for an In-N-Out burger. There you go, Gene. Well, I heard from Gary you're about to get funded. Good for you. You've been doing some knock it out of the park trading here in the past few weeks. Good for you. Congratulations. Yeah, okay. Small losses seems to be a recurrent theme here. I'll put a star next to that one. Okay. Let's see what else. Yeah, good for you. Okay, Mindy, getting out too soon. We got that one. Getting out too early. Yep. Have trouble with phantom trades. Okay. Phantom trades. Move my stop up too soon. Okay. Excuse me. Excuse me. All right, we're almost done here. David M says, I have a heck of a lot of trouble jumping into the all-time highs in the markets, getting long in the equities as they break into new territory. Okay. All right, so let's see. I've got 1, 2, 3, 4, 5, 6, 7, 8 topics to cover. Like I said, I'm going to try to. I'm going to sort of cherry pick these. I don't know if I'll get to all of them. I will try to. If I get to half or three-quarter, whatever few are left, I'll tackle on Saturday morning. And Saturday morning is going to be recorded too. So. Let me interject. First of all, let me back up a second. For those of you on free trials and visiting in the New Year Open House, let me just explain what you're looking at here. Here at Viper, we trade, been in business about 10 years, and we trade intraday movement of futures markets. So namely, in the live room, of course, we show crude oil, we show ES, the E-mini S&P, this chart right here. We show gold futures. We used to show NASDAQ and Russell, but now we show in the upper left-hand corner the E-mini Dow futures YM, and we'll look at that tonight too. Now, as you look at this list, and I'm going to try to show this as best I can tonight, if I can, is that each of these instruments has their own separate, distinct personality. And one of the key things for us as traders is to try to, marry our personality to our trading technique and our trading personality to the personality of the instruments that you're looking at here. So I'm going to put this down as item number 1 in your quest to make money trading futures. And I've said this 1,000 times over 10 years, but it bears worth repeating. It's an extremely, and one of the most important topics that a lot of people overlook is futures instrument selection. I cannot overemphasize this as the number one. I'm going to put stars around it. I've known so many traders over the years who say things to me like, look, Charles, I've come to all these webinars. I've watched hundreds of hours of recording. Till I'm blue in the face. I try to box things in. I try to learn object trader. I've tried all these things. Oops, I want to put this. Is absolutely critical to your success. Now, let me ask a follow-on question. For all of you, there's a great turnout. If you're coming in late, don't worry. A bunch of people coming in late, don't worry. This is all recorded. You'll get copies of it. Everybody will. Why don't you type in the instrument that you trade and tell me if you're profitable on it or not? So, do you trade crude oil? Let's look at our list here. Which ones do you trade? Which ones do you watch? Are you an ES trader? Do you like gold? Do you watch YM? Do you have a NASDAQ chart on your desktop? Some of you trade the Russell. I know you do because I see it in the live room. And when I call out trades on Russell, you're like, yeah, I got in there, whatever. Just type in what instrument you trade. Right here. Any of them. Or maybe something outside of here. Maybe you trade currency futures like 6E and 6B or, dollar index or, notes or ZB, the bonds. Okay. So we got a good mix. Got some gold and CL. So are you profitable trading those instruments? Some of you are probably going to say yes. I venture to say a lot of you might be saying no, I'm not. John says I trade ES, crude oil, and gold, and I watch for some of the correlations. Good. David says ES and gold with YM and NQ. I just watch them for correlations. Good. A lot of gold and ESs. Okay. All right, good. So, I like ES. Most of you know that I trade ES every single day, and I have for many years. And so having done that, I have a good sense of how it moves. And that's the consistency you get, like, for instance, when you have a good friend or a business partner, or you're married to somebody, or you have a good friend or a relationship. When you get to know somebody for a long period of time, you know kind of the quirks that they have, what their hot buttons are, all that kind of stuff. Well, trading is very similar to that, okay? And so what the thing to do is to find that instrument that speaks to you. You might not like ES. And let me tell you some of the frustrating parts about ES. What I like about ES sometimes is that when it trends, when it comes back and does retracements into like the mid-band area, you can put some pretty good support and resistance levels in a trend, and it will respect those a lot. You don't get these big jagged spikes where it spikes way up and then comes way down, and then you think it's trends reversing, and you short it, it flips, and you get stopped out. Very rarely will that happen trading ES. But the trade-off is sometimes you don't get a lot of big moves. So you got to be happy with maybe a little less profit unless you can leverage up and you get really good at it. And the other thing is that it tends to be range bound a lot. Let me show you. So here, for instance, let's go into the pre-market session and talk about ES. And this is true analyzing any market. I'm pulling out ES because this is what it looks like, but I'm pretty sure if I put a Weimer or NASDAQ or a couple other charts up there, it could be very similar. So let me kind of orient you as to what's going on here. I'm here in California. We're connected to a data feed. These are 4 range bar charts. So each bar is 4 ticks. And we look for price action for what direction the market is going. And when we try to determine that, this is the next step. So first thing is picking an instrument and learning it and sticking with it. And even more importantly, if you pick an instrument and you're just not in sync with it and you just lose all the time no matter what you do, well, then you got to pick something else, okay? In the beginning, I would strongly urge you not to trade more than 1 or 2. Just try to learn 1 or 2. You can look at the correlations in the equity markets between all the equity markets. Some of them one lead to the other. If you find that confusing, well, then by all means, don't do it. But the first thing when you're looking at a chart, the absolute first thing you have to do is you have to determine whether there is a trend. If there is a trend present, and if so, is it up? Is it down? Or is it sideways? Now, this on the surface might seem like a very simple thing. And you might say to yourself, well, you know, that seems pretty obvious to do that. But truth be told, how many of you actually do it? How many of you, when you come and you start looking at a market, you just sort of jump in and start wanting to take trades? And don't have a lot of regard for what's kind of really going on in the background, and you just want to get in and start making money. I just want to, I trade a 2 range on ES because it provides more detail on the entries. I know some of you do that. Now, what you're looking at while you're thinking about that is we have background colors are our indicators. We have bar colors, blue, yellow, and red. We have the bands. We have a total of 8 bands, 4 above and 4 below the mid-band, thick line right here. We use that in our trading a lot. I've added the current day open, high, low. That's the white line is the low. This is the high. Here's the open right here. The open starts at the close. So what happens is the markets run through 1 o'clock my time. They have a short pause for about 15 minutes at 1:15 my time, and then at 1:30 they open back up. So you can notice right here when that transition occurred. Right here was when the close of the previous day of the 8th occurred, and the open of the trading session for the next day occurred right here. And that's why you get this tight range like this. Can you see it? John S. says, I always follow a trading plan every day. I never deviate from it. And the number one thing I do before I start anything is determine the trend. Good. Well, I don't know the details, but I bet money that's probably been pretty successful because that's the first thing you got to do. That's the first thing. Or I'll just explain. When I get up and I fire the machine up, actually what I do is I get up early, like 3 or 4 o'clock in the morning. I come into my office and I fire the machine up so that when I get in here at 5:36 o'clock, the machine's already up and running. It's already connected. All the data's there. Okay. And so when you do that, and you have a day like today, you can see that the trend was up. Here's the open of the close of the previous session. The open, so most of you know, of course, that this is midnight Pacific time. You would equate this to your time zone, wherever you're located. Here is midnight of the overnight session here. And so from 5 o'clock, which is right now, until midnight is the Asian trading session. And then the European session starts right here. So while you could make note of the fact that From the close of the previous day throughout the Asian session, the trend was up. The background was green. The background was green, and the trend was up going into midnight. Now, the European session started, and what happened to ES? Was ES still in an uptrend? Yes or no? Over here. Excuse me. Here, let's go back. Let's pretend it's just getting, market's just getting ready to open. Market opens at 6:30 my time, so that's right here. So this is what you're looking at when you fire up your chart. You fire up your chart, your time zone is down here, and you're looking at ES, and you're trying to make a market assessment. You put the second thing I do is the second thing I do once I get the data in is I look at the Bloomberg futures. I pull up Bloomberg and I look at what the futures are doing. I look and I write it down. I write down what the Dow futures are. Today, the Dow futures were up, I believe, 112. S&P futures were up 10. NASDAQ futures were up, I believe, 52. Now, when you look at that, and you can understand that these markets, these equity markets, have been putting in fresh highs almost every day, right? But the challenge is this, is that we all know that very, very rarely do you want to buy the top of a market. So when a market is sitting up here and it's run up all night and it's sitting just off this top, you got to make sure that you don't buy up here. You have to wait until it pulls back. And addressing this patience issue, I forget exactly who, I'm going to speak to the patience issue. In the early morning, as you get ready to trade, maybe you have a cup of coffee, maybe you had some breakfast, you know, you got your dog there, the TV's on, whatever your deal is, and you're all comfy, and you're looking at the market, and I'll be darned, you see it just poking its head up, poking its head up, poking its head up like this, right? Bonk, 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 overnight, whenever you start looking at it, and you start to feel anxious. You start to feel the fear of missing out. I do. Look, I'm not a robot. I'm a human. I have feelings too. When I get up and I look at the Dow futures up 112, it actually makes me angry. I'm like, dang, they ran that thing up again all night long, and I'm going to be left with the chop. And sure enough, I look at the chart, and what is it? Here's the pre-market. Here, you're looking at it. There's 536 right there. Sure enough, what is it? We're left with the slop. Sloppy, crappy, sideways slop. I mean, I don't know how else to put it. There's support down here just under the midband, and you can pretty clearly see that there's resistance up here. So yeah, I'm angry. I'm as angry as you are. I'm like, what the heck? I can't buy it up here. It's already checked here, and it's dinking around in the middle. I sure as heck can't take it there. You don't take it in the middle of the range. This is a range, right? It's got support down here around 67, 68-ish, and the top of it, there's the trading, is the 74. So 7, what is that? 6 times 4, 24 ticks. You're in a 24 tick range, and it's been like that since overnight. The entire depth of the European session has been confined to this range right here. So now tomorrow, when you get up and you fire up your chart, whatever it is, whatever you're going to trade, what is the first thing you're going to do? Tomorrow morning, you get up, you make that pot of coffee, you fire up your Bloomberg, whatever. You get your charts all set up, and you're looking at them just like this. What is the first thing you're going to do? Of course, you've already figured out your instrument, whatever that is. You know, maybe you like the Russell. Maybe you're watching gold that morning. Maybe it's gold and ES. What are you going to do? Determine whether there is a trend. What is that trend, if it's present? And are you not trending? Are you sideways to up? See, that's the other thing here. Is that and I'm going to put a little caveat on the sideways, because there is sideways, we call it to up, which means that you're coming off of an uptrend, so you're still sort of technically in an uptrend, but you're going sideways. Or there is the other one, which is the converse of that, which is sideways to down, which means that you're coming off of a downtrend, right? So sideways to up or sideways to down. Right. Now, if you determine that you're up, if the trend is up, then we automatically know that we are looking for we are looking for long trades only off of retracements to support into support areas to get long, right? If you identify the trend is down going into the open, then you're pretty much looking for short trades off of retracements into resistance, right? That's the kiss and roll we talk about. In the case of the sideways to up, when you say a market is sideways to up, so what the sideways to up is like the condition on ES this morning, and where you came off an uptrend and now you're sideways, but the background is still green, the bars are predominantly blue, the midband and the bands are no longer stair-stepping up, but when you look at this kind of condition, are you taking longs or shorts in a sideways to up condition? See, all this preparation that we're doing is basically getting you starting to figure out what direction trade you're going to take. It's kind of like laying that foundation for the house, right? First you got to dig the hole, then you got to put in the rebar, and then you pour the concrete and you form the foundation. Then you put in the runner board and you start to build the walls. You know, that's it. Pour the slab foundation. So why do we take so much time on this prep? Why am I spending so much time talking about this? I just want, hey, Charles, this is all cool, whatever. Show me the trades, man. Show me the stinking trades. Where are the trades? I don't want to do all this prep. I don't get time for that. Why are we talking about this? Anybody? One of the things that some of you said is control emotions and dealing with losses and having trouble seeing where to get in and getting in late. And I would venture to say, and don't take this as an insult or rude or anything, that you're not doing all the prep you need to do to force the lack of trepidation. You have to get away from being afraid to get in. And the only way you can do that is to prepare yourself. You have to go into this market knowing what you're going to do as soon as you look at it. And so that's why I'm taking so much time talking about this. Because once you start doing this every morning, see, the hardest thing about the other challenge with trading is you're an entrepreneur. You're in business for yourself, right? We're all in business for ourselves. We are entrepreneurs. How do entrepreneurs succeed? Well, they normally have some kind of plan, right? They have some structure. They have some format. They have protocol. They have things that they do every day in a regular manner. I mean, you can't imagine business owners that just throw caution to the wind. Well, you know what? I'm going to go out into the world today and I'm going to try to sell, as much as I can. Maybe I'm going to make some money. Maybe I won't. So you as a trader, if you don't do this preparation that I'm showing you right here, you would be like the entrepreneur that goes out clueless into the world and tries to make money. It's not going to happen. I mean, I started trading in the 90s. I've been trading for 20 years, so I know what I'm talking about. You've got to do this preparation. You've got to do it if you want to make money consistently. If you're scared trading, if you have trouble with emotions, and you're struggling to make money, it's probably 90% of the thing is that you aren't doing this in detail enough to get yourself comfortable so you're not scared to take the trade. So the answer to this is you're taking longs off of support. In a sideways to down condition where the trend overnight was down and you're looking to trade the sideways condition in a range, you are taking shorts off of resistance. Now, I ask this question almost every webinar. How many of you are not comfortable trading ranges? Show of hands. You don't like ranges. You can't make money at them. You've tried everything in the world to trade them. You get in too early, you get out too late, you buy it, and it flips on you. You think you got the support and it doesn't hold. You short it and it flips and you stop out. You just hate ranges. You can't make any money trading ranges. Show of hands. How many of you am I speaking to you? Would that be anybody in here tonight? Me? Yes, that's me. I identify the swings too late and I get in and miss it. John says I used to be, but now I'm trading them for scalp trades. Brutal, I get hammered all the time. Okay, I'm gonna put something in here to help you. If you are the trader in here tonight, and the question was, can you trade ranges? So you've got to know that about yourself. You've got to have you've got to have some self-awareness. That's another good trait of a good trader, right? You got to know what you're good at, and you got to know what you're not good at. And over time, you're going to figure that out. And if you sit in all honesty to yourself and the team, if you say the answer is no, I am not good at ranges, then what should you do? If your answer tonight was I don't trade ranges very well, I've tried it, I've done it in sim, I've lost my butt keister trading a thing that just never works, what do you do? What would you put into this? Fill this blank in right here. You got to fill something. What are you going to do? Okay, I'm going to help you out here. Then that person, that trader, you perhaps, should not trade ranges. Don't trade the range. It's literally that simple. Right? I mean, I'm not trying to be a jerk here. I'm trying to be brutally honest with you. So let's go back to our planning and analysis. Let's go back to our planning and analysis here. You have done your due diligence. You got up early, tomorrow morning, whatever. You come and you look at your chosen market. You see that it looks very similar to this. In the overnight session, it ran up. You look at Bloomberg, the Dow futures are up 100 and so whatever, and S&P's up 10 or 12 or 9 or whatever, and you're hovering off the highs of the morning right here, and you're in a range. What should you do if you don't like ranges and you are good at them? And you see a market that looks like this, what should you do? Not trade it. I mean, how else can I say that? You don't trade it. If you're sitting there and you're saying, I can't trade ranges, and you wake up and you do your analysis of the market and it's in a range, then that's telling you what? Look for something else that's trending. Because when you say I can't trade ranges, or I'm not going to trade ranges, or I lose trade, whatever, then essentially what you're saying that you are a trend trader. You need to have a trend to trade. And there's nothing wrong with that. I would suggest if you can, try to work a little bit of sideways range-bound trading into your repertoire because, as much as 40, 50, 60% plus of markets, especially if you're trading ES, are going to be range-bound. And sometimes you can make good profit in these ranges like this that are 20, 30 ticks, especially on ES where it respects the support levels and respects the resistance. And you can scalp out 10, 15 ticks, no problem in the middle here. But you got to practice. Do it in sim and do it with some micros until you get really good at it. ES would be a good one to learn on. I guess that's what I'm saying. Yeah, definitely would be a good one to learn on. All right, so now we have a plan. We know that if we're range-bound traders, we're going to go look for something that's trending. Like you might want to pull up a crude oil chart. Gary's pretty good at analyzing crude oil first thing in the morning. If you go log into the live room and you're looking at the charts, and Gary has a crude oil chart up there, and it's tanking like a dog, and it's retracing off the mid-band and beautiful kiss and roll, 60-tick trades. Well, then fire up a crude chart and take a quick look at it and figure out where you're getting in, right? All right, well, let's proceed, and then we're going to move on. Okay, I've done enough. Is there any questions on that? Yeah, so when the market opened at 6:30, look at where it was. Here's 6:30 right here. Right here. It's just a few ticks off the high. It's right here. In fact, when I came in the room, I said I think I get in there like about 6:20, 6:25ish. That would have been like right in here. I said we can't buy it. You can't buy it up here. You have to wait. You have to wait. And I said, if it came back down and bounced off of 68, I would take a long trade. Anybody remember that? Because we knew support was right here. It's been respecting this range for 6 hours. If it was going to bounce, it would do it right here. So just to be clear about what I'm saying is that when I looked at this market and I did my analysis, I said I cannot take the long trade up here. The market is here, but I'm telling you that I'm not going to buy it until it gets down to here. Now, why did I say that? The market is here, and while it's here, I'm saying I'm not buying it, but I will buy it here on a bounce. Why did I say that? And the reason I'm asking these excruciating questions over and over again is because I'm trying to teach everybody in here tonight to have the ability to ask the same questions and say the same thing that I do in the morning. Reach the same conclusions that I do when I look at this chart, and I instantly know what I'm going to do. Instantly. Pretty much any chart, I can look instantly at it and within nanoseconds tell you precisely what to do. And as soon as I looked at this chart, I said, I'm not going to buy it until it comes down to 68. And so there I'm speaking to the patient's concern. Because that is the support area, right? And we want to get long from support. We did our analysis. We know that the market is up to sideways. So it's in this category number 3 right here. We're only taking longs off support. And so you very quickly identify that your support area is right here. So this is where you're going to get long from. Right. It's a green background, predominantly blue bars. You're in an uptrend, but you're going sideways. So you buy support and get long. If this condition exists tomorrow morning, we will do exactly the same thing. If the flip side of this is present tomorrow morning, where the market's been selling off all night, and we're pushing the lows, like over here, for instance, right? Then we're going to look for retracements to resistance to get short. Before I advance the chart, is everybody on board with what we're doing here? You just made $80 trading crude oil? Good for you, Gene. You're a crude trading machine. Well, I'm trying to, in this case, recreate what happened in the live room and try to illustrate to you that when I start analyzing charts first thing in the morning, you have to go back and see what happened overnight. You have to look at what's happening right now coming off the European trading session, preparing yourself for that U.S. Open that happened right here. And we know we have to wait for a pullback. So let's go ahead and advance the chart. Right here at 6:34, we hit the high again. Excuse me. And let me explain one last time in case anybody's confused about this. The reason we do not buy the high is because inevitably what happens, especially on ES and all the markets, all the equity markets, gold, other markets too, is when they hit this, they're going to pull back off of it. There's going to be profit taking. All the market participants who were long from down here, other levels, getting long, buy programs, kicked in, running it up all night, thousands and thousands of contracts changing hands. When it hits this top, what are they doing? Well, let me ask it a different way. If and when you get long here and it gets close to here, what are you going to do? And wouldn't that be the same that every other trader trading ES in the world would be doing? Right. Everybody in the world that trades this sees this range. There's no mystery about it. Everybody sees it. Yeah, so they're buying support and they're taking profit at the top. All the market participants who bought in down here are taking profits up here. So what happens is when you buy here, you're trading right into the hands of the profit takers. And so what happens is, and this causes your fear and trepidation about the market, is because you pulled the trigger to buy right here, and you're upside down right out of the gate. Right out of the gate. As soon as you pull the trigger, you're negative, and you get negative real fast. And so when the emotions start kicking in, and the losses, is because now you're down. And maybe you got a 2-lot on, so you're losing money fast. 25 bucks a tick. Bam, 25. Not long till you're down 100 bucks. Bam, you're down 150. 200. On a 2-lot, you get down to here, you're down almost 300 bucks, maybe more. You're down here. You're like, no mas. I want out. I can't take this anymore. Why did I buy the top? That was the stupidest thing I ever done. I should have never done that. And sure enough, what happens? Look at this. Where did the market go to? Right exactly, almost to the tick of where we said we were going to buy it. Right here. It came right to it. Right to it. Now, when that happens, do you dink around down here and start thinking, well, you've done all this analysis. You've been looking at the chart for 40 minutes, 20, whatever, however long. You've done your analysis. You're in the room. You hear the call. I'm buying 68. Market opens up here. You've been beat up enough to know you don't buy the top, so you stop doing that. Now, when it gets down here, and this is speaking to the comment earlier where it seems like everybody's getting out of their scalp or I'm getting in, that doesn't mean you buy it here. It's too late. You can't buy it up here. You can't buy it up there. You shouldn't buy it up there because by the time everybody got in here and you're looking for an 8, 6, 8, 10, 12 tick scalp, you're taking profits from the mid-band right here. So if you're getting in, you're taking you are feeding into the traders who are now taking profits on their scalp trade from the bounce. So, in conclusion, there are many ways to get in here. You can pull the trigger on a market order. You could have had a limit order sitting right here. You could have put a limit buy order right here. You could have drawn a region box. You could have drawn a line down and had it filled like this, a trend line using the OT tool. There's all manner of ways to get in it. However you executed the trade, you want to get in as close to here as possible. Is everybody clear about that? No, you don't want to, in a sideways to up condition, I would never short the top. This is waiting for a long bounce condition here on this trade right here. This is waiting patiently for a retracement. Now, in this case here, you had to wait from 6:30. Here's the open of the market right here. You had to wait 7 minutes. And listen, I know at the open of the market, 7 minutes feels like forever. You're just sitting there waiting. It's dinking around up here. Here's the self-talk. The self-talk is going like this. You know what? It's going to break. It's going to break this and run 50 ticks. It's going to run 1,000,000 ticks. I'm going to miss it. It's never pulling back. And you're saying that to yourself when it's doing this. Up here at the high, you're saying that. I know I am. That goes through my head. It still does, even after 20 years. Watch it. Watch this stupid thing. It's going to break. It's going to break and run. It's going to run up 30. That's going to be the trade of the day. Dagnabbit, I'm going to miss it. But then the discipline part of you kicks in and says, no, I'm not buying the top. I don't care. It's got to pull back to here. It's got to. Or I'm not taking it, period. So there you go. There's 4 minutes, 5 minutes, 6 minutes, 7 minutes. You're rewarded for your patience. Now, when you get into this trade, before you even take it, what is your plan of execution? And let me help you out. Okay? Your plan of execution, and I'm going to, at a very high level, give you a couple of options. Okay? This is going to help you. Option number 1. You would be saying to yourself something like this. We are in a strong, trending market, so I am looking for runners. 2, we are in a sideways slash range bound market. And therefore, I am looking for what? Fill in the blank. Only. Fill in the blank. So this is part of our analysis. This is the follow-on piece to our foundational analysis. We looked at the structure of the market, up, down, trend, sideways to up. We made our market analysis. We have our support and resistance levels. We know whether we're getting long or short. We have an idea where support is. We know we're getting long and where we're doing it. To execute our plan after we enter the trade, if we're in a very powerful trending market and we get a beautiful mid-band bounce, we are looking for number one. Number one is you're anticipating a scalp and a runner. Correct? Number one is trending market looking for runners. When you enter this trade, okay, before I answer that question, I'm going to put this aside. Now, I want everybody to try to participate in this question. I've been barking at you all night, so my apologies. My webinars aren't normally like this. Mine are more normally participatory. I have lots of questions and I show setups and you make the calls and everything. This is a little bit different tonight because I've been hearing a lot about, I'm not profitable. I can't figure out what I'm not doing right. Why can't I get this? And I'm losing money. And we got to address that. Obviously, if I keep showing the same thing over and over again and you're not making money, then something's wrong. So I'm trying to fix that. So let me ask you, when you get in and you took this trade, where are your targets? Where are you getting out? You should know that ahead of time. Before you even take that trade, which you know should be around 68 on a bounce, you should also know when you're executing it, where are you getting out? Where are you getting out? Just go ahead, type in a number. Here's the numbers over here. Here's 68.50. Here's 69, 70, 71, 72.50, 73. Where are you getting out? Here, I'll give you 5 seconds. Type in a number. Where are you getting out of this trade that you just took right here? Tomorrow morning, you take this trade. Same exact trade sets up. Tomorrow morning at 6:37 a.m. Pacific, it's like a Groundhog Day, deja vu, all over again. It's like, you should know where you're getting out. Where are you getting out? Just go ahead. I'll give you 10 seconds. Type in a number. Seriously, try to participate in this. Where are you getting out? 69, 70? You're getting out at 71 here? I don't know, 71.50, 73? What? What are you going to do? You took the trade. We said 68. You bought the bounce. You're in it. Maybe you got two on. Okay, you got two on. What are you going to do? Where are you getting out? Where are you going to take some profits if you took it? 9 seconds left. Just type in a number. Look at the chart. Determine what you're going to do. We know this ahead of time. And you know what? I'll try to work with everybody in more detail. Like tomorrow when I do a trade recap, I'm going to do a trade recap tomorrow. I'm going to recap all the trades in detail, and I'm going to do it just like this. Okay, I'm going to show you the logic of where we got in and why, and where we're getting out. I see a lot of good numbers. So now let me speak to the topic that we wanted to address, which is the two-lot entry. Okay, the two-lot entry is you get filled on one of these bars long. Okay, depending on your you had a limit order, or you bought it here, or you bought it here or here, wherever you got in. The first thing you want to do, on ES, that once ES gets anywhere from around 8 to 10 ticks, you want to get that scalp off. All right? So let's use a round number. Let's suppose that you were filled long at, 69. Let's say you didn't get in up to up here somewhere, okay? So how many points is 8 ticks on ES? How many points? So if you took 69 plus how many points would give you 8 ticks? How many ticks are in ES? Do we know? Does everybody know? How many ticks? I think it's 4, right? So 8 ticks would be 2 points. So 2 points from 69 would be 71. 71 happens to be right here. So at 8 ticks, we take off our scalp. Right here. So what you put on 2, right here, long, yes? Now, if you got filled down here right near 68, you get off a couple ticks earlier than that. I'm just going to use this for the purpose of illustration, okay? All right, so you're long 2, and here's your target for your scalp, 8 ticks up. Here you're taking 1 off. Now, you have to remember to put in your protective stop. Now, on ES, you can go like 8 or 10 or 12 ticks down. So let's do some math. Let's say it's 12 ticks is 3 points. So our protective stop on a 2-lot, the initial stop would be 3 points below 69 or 66. Is that right? No. 69 less 12 is 3. There's 2, 4, 6, 8. Yeah, see, you wouldn't go 12 ticks. We all know where you'd put it, right? You'd put it right here. You go underneath the midband in the swing. So in the end, that turned out to be 69 to 77, like 5 or 6 ticks. Fade that by a tick or 2. So here's your initial protective stop on a 2-lot right here. In the case of ES, you want to go right under, you want to fade a couple ticks underneath your support level, which you can see clearly is at 68, right? So that's your protective stop. Everybody on board? Now let me ask you the final question as far as getting out of this trade. Final question. If you're going to take profit on your second contract, I'm going to give you 3 spots. A, put it here. B, put it here. That's A. This is so you got 1 contract left, and you're trying to figure out where you're getting out of contract number 2. Where are you going to exit it? So this is A. You would type in A if you believe it should go there. B would be here. Oh wait, I'm going to give you a C. Hold on, don't jump the gun yet. Hold on, let me just hang with me here. Okay, all right. So here's B. Okay, there's B, or C. C would be right here. Hold on, let me get C up. Let me get C up. Okay, let me get C up. I'm trying to position C here. Stand by. Yeah, there we go. Okay, it's not very clean. It's the interest. I'm almost running out of time here. I spent the whole day on this. Well, thank goodness I got Saturday. I can get the rest of it on Saturday. So my apologies. I want to do a lot more, but I'll make sure we get it. All right, so I'm going to give you 10 seconds to type in a letter on your second target. So 1 contract is off. Oh, and I forgot to mention that once you get your scalp trade, you take the 1 remaining stop that you have on that second lot, and you come within 2 or 3 ticks of your entry. So you have 1 contract stop left here from your initial 2-lot stop, yes? And you take the remaining 1, you take 1 off. An object trader will do this automatically for you, but if you're manually doing it with limit orders and whatever, then you got to do it yourself. Get it back like 2, 3 ticks behind here in case something flips. Now you have a free trade. You're up 8 ticks less 2, 6 ticks net. So now we're trying to figure out how we're getting out of that second contract. 5 seconds left. Cast your vote. A, target. B, target for your second contract to get out, or C, target. C, target right there. Put B like right here, and we'll put A up here. You got to pick one. You can't go, oh, well, it's B or C, or maybe it could be A, or I don't know, or is this, but I mean, tomorrow morning we go to our Groundhog Day. We're doing our Groundhog Day, and the groundhog shows itself, and the exact same trade that we're looking at tonight sets up perfectly, exactly the same, only at different numbers. What are you going to do? Maybe you logged in late to the room. Maybe it's setting up as you're looking at it in the pre-market and you want to take it. What are you going to do? You got to know what you're going to do, right? Okay. Well, let's play it out, and I'll show you what happened. And then we'll discuss why. Okay? All right, here we go. All right, so we come to, there's 71, so we get our scalp out, right? There's your scalp filled, right there. There's your 8 ticks. Okay, good. That's about midpoint of the range, right? Midpoint of the range. It's coming up. It's coming up. Coming up at wick 73 and a quarter. Wick 73 and a quarter. See it? Right here. And then it pulls back precipitously and starts to drop again. If you said C, you were correct. Now, why is that? I always try to put in something to help everybody figure out why. No, there was no D. Somebody typed in a D. So what are you doing when you're trading a range? So this speaks to your understanding and planning and how to trade ranges, right? This speaks to this. And it really comes down to, sort of odds. And what's called fading. Fading a swing. Fading a resistance level. Fading a support level. Fading means that you come within some amount within that. So in other words, you're looking to buy support. If support is down here, you need to fade that to get in. So you're not actually getting in here. You're getting in here. That's called fading. You're just a few ticks, and it really depends on the instrument. More choppy instruments like NASDAQ and YM, you've got to be more open to fading because their ranges are choppy and huge. With ES, it's very well defined. So you want to come within a decent amount of that top. So let's talk about what we did here. Here you would have been looking for a fresh high. When you're scalping a range, obviously I don't think anybody typed in A. When you're scalping in a range, you're not really looking for fresh highs, okay? You might get it, but looking at it from a statistical point of view, what are the odds that it's going to hit here, here, or here? Think about it statistically speaking, right? Now, this is pretty close. This is within a tick of the high. What are the odds that it's going to come to here or here? Probably not too good. When you look back over here, you can see that there was a couple of times where it wicked it, couldn't get it, couldn't get it, couldn't get it, couldn't get it, got it by a wick. Out of all these times that this market has been up here, how many times did it wick it? Like 2 out of 6. So statistically speaking, your odds are going to be much better if you come within like 6 to 8 ticks of the top, and that's exactly what you did. You came within 4 ticks of it. 4 ticks of the top. You could have actually gone a little bit lower like that, maybe 5 ticks of the top. So the actual trade was defined as this. You were filled at 68.50. You took one scalp off here at 71, and your second target, fading the top of the range, was taking number 2 off right there. Now, does everybody see how and why we did that? So I don't, when I try to show this, I just don't want to put this in your face and not explain why we're doing it. I want everybody to come away from here saying, oh, yeah, okay, I see why you did that. Now, let me ask you this. How much was this trade worth? Well, we got 8 ticks on the scalp, so 8 times 12.5 or 2 points is $100 on leg 1. And we got the 73 on the second one, so 68.50 to 50 to 73 is, well, it's not 5, 4.5. 4.5 times 50 is what? 225 plus 100? $325 on one trade. You felt no heat. It executed perfectly. It was done in about less than 5 minutes. You're within less than 10 minutes of the open. Three bones, 3.25 less commission. Now you might say, well, that's not a whole lot of money, Charles. I mean, what am I supposed to make a living on $300? Are you kidding me? I spend more than that on dinner. Well, now wait, hold on a minute. If you get really good at scalping ES, let's say that you put 2 on. So you went 2 with the scalp, and you went 2 with the second target at 73. Now you made 650. How many of you have a profit target of $500 a day? You want to make $400 or $500 every day. That's all you want to make. Get in there, I make $400 or $500. I'm happy. I'm a happy camper. I'm done. That's my goal. That's all I want to do. Yeah, most of you say that's my goal. I'd be thrilled. So what I'm telling you is that on ES, if you understand and lay the groundwork for the range, the trend, you see very clearly. You don't get in at the top. You never buy the high of the day. Never do that. You avoid that. You patiently wait for the pullback. We told you in the room where to get in. I took this trade, okay? I took this trade. And you learn slowly. You can do it on micros. Micros are 1/10. It's only $1.25. So you get the feeling of live trading. If you have emotional issues, you're trying to deal with losses. Now you might not make a ton of money. You're going to make $65, but you know what? It's a winner and a confidence builder. When you're in a losing condition, you want to just get back to break even, and you want to start to build your confidence. That's the key, is getting your confidence back. Finding good trades on good instruments. Right? That's all you're trying to do here. You don't have to knock everything out of the park. Just get the doubles and the singles. Right? Just make contact with the ball. Get it out in the infield. That's all you're trying to do here. You're not trying to hit huge home runs. I'm going to go stop the recorder. We're running a little bit over here. I missed the